So, yeah, I think the topic today is careers in investment management. And I guess I'll give you a quick overview of the industry and, what the different roles are, how to think about getting into the industry, and a few tips on sort of the recruitment, the application process and the interview process. So if we go through the slides. So firstly, just to introduce myself, I graduated in 2004 from the University of Cambridge in the UK, where I studied economics. I then went into Goldman Sachs, where I worked in the equity research department, covering the European telecom sector. I did that until I was an associate, and then decided to go and study in the States for a couple of years, doing my MBA, which I finished last year, at the beginning of last year. I then went back to Goldman Sachs and joined their principal strategies group, but unfortunately that was shut down soon afterwards due to the regulation. The Volcker rule was implemented last year, and so since then I've been at a fund, a $4 billion multi-strat hedge fund called Arrowgrass Capital Partners, based in London, where I'm the global technology, media and telecoms analyst, specializing on the equity side. So that's a bit about me. Moving on to the industry, it's a massive industry. There are trillions, tens of hundreds of trillions of dollars of assets managed globally, and it can be pretty confusing. I think if you're looking to get into the asset management industry, you're principally going to be looking at going into institutional, large institutional investors, which are mutual funds or pension funds. These are the names you may have heard of, such as Fidelity, Capital, Vanguard, State Street, or PIMCO, and these are sort of the big blue chip specialist asset managers. A lot of these manage, I think BlackRock manages over $1 trillion. Most of the investment banks have an asset management arm as well, and these are great places to start your career as well. So Goldman Sachs Asset Management or JP Morgan Asset Management, these are great places. There are other types of funds. There are hedge funds like where I am, and they do different strategies. But I think typically for an entry-level role, it's very difficult and rare to find an opportunity within a hedge fund. Principally because they are smaller, they can't offer you the training and support that you would really need at the beginning of your career. So I think I'll focus mainly on sort of the larger asset managers. It's important to know that there are different asset classes you can invest in. So the equity is probably the one that most people tend to focus on outside the industry. That's just in the stock market, investing in shares. That's where most of your pension assets may be. But actually, the fixed income industry, where you invest in bonds, is a huge industry, actually larger than the equity industry globally. And there's other types of investments, so real estate trusts, commodity investing, foreign exchange investing, which are also done by a lot of these asset managers. But equity and fixed income do form the majority. I think one thing you should also know about investing is there are different styles, and different funds typically follow different styles. So if you look at a large asset manager such as Fidelity, the company will have numerous mutual funds within it, each of which will specialize in a different investment style, will have a different mandate. So it may be to invest only into value stocks or to growth stocks, and maybe investing in stocks where you can generate income, so stocks that pay a high dividend yield. It could be emerging market focused. It could be small cap versus large cap. And there are certain funds which, that is specifically the hedge fund industry, but also within some of these asset managers where there may be a mandate to look for an absolute return. So to make a positive return on your investment, regardless of what the market does. And this is different to the typical mutual fund or pension fund, which will invest relative to a benchmark. So you're trying to outperform a market or an index benchmark. The most important thing I think to know when you're applying to the industry is to understand the role you will have when you come to these firms. And I think for the majority, that's going to be as a research analyst, at least to start with. So the way most asset managers are set up is that you will have one or several portfolio managers that manage the funds within an asset manager, and supporting them will be a team of research analysts who generally are industry specialists, but could be economists or could have a broader remit. And those research analysts, which is what you would be if you get into a fund, would typically come up with investment ideas and try and help the portfolio manager manage their fund. So what your job would entail as a research analyst is you'd essentially be doing fundamental analysis on industries and companies within those industries, trying to pick on trends and trying to pick, essentially foresee events before they happen, and that's where you can really make the money in this industry. So, the way you do your research is by meeting management teams, by doing proprietary surveys, by speaking to various sort of market players, and just trying to form your own view on which companies you think are good and bad investment opportunities. And this obviously involves a lot of fundamental work, building the models, maintaining them, etc. And also, a very important part of the role is to communicate these ideas and sell them to your portfolio managers. One thing I think it's worth touching on is that I think the number of roles on the buy side, which is within an asset manager, is relatively limited, and is a small number relative to the number of applicants. And so one of the things that's worth considering is to become a research analyst on the sell side, so within an investment bank, where you are an equity research analyst and your clients, instead of being internal portfolio managers, are the broader market. So you will publish that research, you will then try and sell it to a whole host of different asset managers, hedge funds, and other clients, as well as selling it internally within your organisation to your salespeople or your traders. And I think that is essentially performing a very, very similar job. It's the role I took when I entered the industry. I started as a research analyst, so I think it gives you exactly the same training in terms of thinking about how to analyse companies and industries and do the fundamental analysis. The difference is who you're communicating to, and I think it's a relatively common career path to do a few years in equity research on the sell side and then move to the buy side, to the investing side. And I think just one thing to bear in mind on the role, professional qualifications are not essential, but the CFA is really the benchmark qualification here, and you should expect to train for this, and that can take on average around 3 or 4 years to complete that qualification, which will teach you about portfolio management. And I guess if your ultimate aim is to manage money, most organisations will help you in that. After a few years, successful years as a research analyst within an asset manager, you then can become a junior portfolio manager, where you start managing money or shadowing a senior PM. And then as you develop a track record of making money on a sort of continual basis, then you may be given capital to actually manage. And that's kind of the career path. But generally, you do need to be an analyst before you become a PM. And I think one of the good things about the industry is you do have a work-life balance. At least you should have a work-life balance. And I know a lot of your peers will be looking to go into investment banking, where you do sacrifice a couple of years of your life to essentially working all hours of the night and weekends. With fund management, especially on the equity side, your hours are centred around the market, which is open in the normal hours. So I think in the UK it's 8 till 4:30. I think it's 9 till 3 or 9 till 3:30 in the US. But your hours are centred around there. So you may have early starts because you typically need to be in before the market opens. But it's rare that you're working. You would do it all night, or you need to work at the weekend, unless it's a certain work or project that you've taken on yourself. To the next slide. So, how do you research the industry? I think a great starting point is the vault guides. or any other career guides that are available for that matter. I've used the Vault guides in the past. There's the guide to investment management, the guide to finance interviews. These just give you a great overview of the industry and the entire application process, and will give you kind of useful insights into the main players in these industries, and that really helps when you're applying to know more about the companies. Your second port of call should be the company websites. All of the big blue chip asset managers and all of the investment banks with asset management arms will all have dedicated career and graduate websites which will teach you about the companies, the culture, the specific role you will have in that company. And I think they give you information not only on what your job would be, but also when you're applying can really help you feel comfortable that this is the right firm for you, and you can tailor your application to show that. Career services is invaluable. I think it can be a great platform to connect with alumni or other people who work at the firm you're trying to apply to, or people who have been in the industry. And I think you should take every opportunity you can to meet with people and chat with people who have been in the industry. I think it always helps to have a personal referral. So if you can get that through having a coffee with someone who's then willing to put in a word for you, or even just so you can reference that person's name in your application or your cover letter, just to show that you do have some personal experience with the company. I think that's very useful. So use all the resources you can from there. And now you have Evisors, which I'm sure Christine will appreciate me mentioning. But I think it's a great idea. And if there is a specific company you're trying to you're applying to, and you want to know more about it, there's a chance that this is a new way to actually spend half an hour talking with someone who's worked there and really get a better feel for the company before you apply. Websites and news sources, I think these are the obvious ones: the Financial Times, various market websites such as Market Watch. If you are interested in the hedge fund industry, I use Market Folly. I think that gives you some of the latest trends of the bigger hedge funds. And there's a number of books I would recommend reading. Really, if you're interested in investing, I think these can be very useful. So the two books that are generally referred to as the Bible of investment management are The Intelligent Investor by Benjamin Graham and Margin of Safety by Seth Klarman, which is very difficult to get hold of. But if you can, these give you a great one-on-one on what investing is and how you should think as an investor, and really that should be the foundations of your thinking when you come into investments. And those aren't necessarily the way that everyone invests. They teach you the basics of value investing, but I think those are essential reads. Beyond that, there's a number of other books. I think all of the Michael Lewis books are very relevant and a lot easier to read. And I think there's general finance books. Too Big to Fail was a recent one. Barbarians at the Gate was interesting, more just to get a feel for the industry. And there's a book I recently read called You Can Be a Stock Market Genius by Joel Greenblatt, which gives you a different flavour of the different styles of investing and different investment strategies. And I think that's also a great book.
Excellent. Nickyl, one question before you move on. On a daily or weekly basis, what are the top blogs or online industry news sources that you follow?
I think as a weekly read, I think The Economist to me is still the premier business and economics, finance reads that I just see as essential reading. And beyond that, the Financial Times is obviously a lot more popular in the UK, whereas I think the Wall Street Journal is in the US. The weekend edition for that is just is enough to keep on top of exactly what's going on in finance, what's going on with different funds, with different companies, with politics, etc. And I think just really to keep abreast, those are the two kind of news journals that I think are essential reading, once a week. And beyond that, I think just visiting some of these market websites, periodically. It's just great for keeping in touch with what's happening in the market, for giving you new investment ideas and investment themes, and just following what people are thinking. So I would, that would be my answer.
Excellent, thank you.
Okay. So in terms of what investment management firms are looking for, the obvious one is they're looking for people with the right technical skills. So these, I managed to narrow them down into 3 bullet points, but I think there's clearly a lot more to it. When you look at the analytical skills, I think this is far and away the most important skill, or base skill that everyone in asset management needs. Your job is essentially to try and see things that the market and others haven't seen yet, and act on those insights before the others do, and that's when you can make money. So I think being able to model things well, to understand different dynamics of industries, and how different companies are performing within those industries, and to identify trends within those is just absolutely crucial. And I think that skill is kind of the baseline skill that you need to be successful in this industry. So that's something that everyone will be looking for, to see that potential in you as when you apply. And I think potential is a big word here. I think if you are a history major or an English major, and you don't have previous finance experience, I think what people want to see is that you do have the potential. So when I talk about these skills, I think there are different ways to analyze them, different questions you can ask in an interview to see how people think, and it's not you don't rely on people already having the analytical or financial modelling skills. The second thing in asset management is decision making. This is not a job for risk-averse individuals. You have to make relatively big decisions with large amounts of money, and you have to, you live and die by those decisions. You can see almost, on a daily or even, minute-by-minute basis how those decisions are performing, because especially in the equity market, you have your ideas, and you can see where exactly, in the red or the black, and that can be that makes it very high pressure, and something that you have to be prepared to make those decisions rather than sitting on the fence and to stick by them. But I think on the flip side, you also have to be prepared to admit when you're wrong and cut your losses. I think that's almost as important a skill as making the decision to invest as the decision to uninvest. And that takes a certain type of character, and something that the firms will look for. And finally, on the skill set, I think it's pointless being a great analyst if you can't sell your ideas. I think what is going to be absolutely crucial is that you come up with good ideas. That's important, but that you have a way of actually selling those ideas and communicating those ideas to your PMs who can implement them, because otherwise they get wasted. So I think having the basic written and verbal communication skills is crucial in this industry. It is a team-based industry. Relationships are important, so I think that you shouldn't underestimate that. What firms want to see is they want to see a passion for investing as well. Like I said, it doesn't matter if you didn't do a relevant degree for your undergraduate, but it does matter if you are applying for this job and you have never read a single finance book, you have no idea what GDP growth is, or where the market's trading, and you've never managed a shadow portfolio. I think you need to try and show that you really want to be in this industry. You're given the high pressure nature and the results oriented nature of it. I think people want to see they want to see individuals that really care and really want to be in this industry for the right reasons. So I think to a limited extent, you just need to show that you're on top of the market news. Like we touched on, that you do read the Financial Times, you do read various blogs, or you keep in touch with what's going on. And I think this links, this can be demonstrated through your experience. if you have relevant work experience, that's fantastic, and it really is an advantage. Or, it is a positive contributor. But if you don't, there are loads of other ways where you can demonstrate that passion. So maybe you were a member of the investment club at your school. Maybe you've been managing real money or a shadow portfolio online for a number of years, or even just more recently. And I think showing that kind of commitment and curiosity, whether you've been successful or not, is important. And you should be able to demonstrate that in your application and in your interviews, and and support that. So if you say you worked in an investment club, or you've been running a shadow portfolio, you should be prepared to talk about an investment you made or an investment you are about to make and why you made it, and really understand the thought process that went into it. Be prepared for that. And the final thing is personality. I said you have a work-life balance, but at the same time, you probably are working 12 hours a day, Monday to Friday. So whoever's interviewing you is looking at you as someone they're going to have to sit next to and work with for 60 hours a week. So they need to get on with you, and you need to be able to communicate and connect on some level. So just showing you have extracurricular interests or activities is important to try and demonstrate that and show that you aren't just a robot. So the final.
One question, Nickyl, that we just had come through. How important is it? You mentioned experience, but to have previous iBanking, investment banking experience, or is there ways, let's say you're graduating from your MBA, that you can showcase that perhaps analytical ability without having the investment banking background?
Yeah, I mean, I don't think it's important to have an investment banking background. I didn't have an investment banking background, and I think, as I said, an entry-level route in this industry is, which is very common, is to go into equity research first. So rather than going into the M&A, and I think in terms of if you're a career changer, so say you've been a consultant or you've worked in industry. It is possible to change. I think there are some maybe more specific examples. So if you worked in the healthcare industry, and you come into a big asset management firm, there's a high chance that if you do become an analyst, you are likely to be put into to become the healthcare analyst there. So I think that's more sort of on a specific case by case. But if you've done something like either the CFA qualification, or you've been doing that in your spare time or separately, or you've done an MBA, I think that's more than enough to manage a transition. And in fact, I know a lot of asset management firms, even at the post-MBA level, will look specifically for people with no investing experience, because they want to train you and mold you into an investment philosophy and style that is compatible with that firm, rather than coming in with a different mindset. So I think there's definitely opportunities there, but again, I think the key is to show that commitment and show that passion. And I think what this industry is valuation and having the sort of the numerical quantitative skills are important, but what it really comes down to is understanding businesses and industries and trying to pick winners and losers in an industry. And then obviously you do have to put a valuation framework on top of that, but the bolts and nuts is understanding businesses. So, it's demonstrating that skill is probably, I would say, one of the key facets, and you can get that without having worked in finance before.
Excellent, thank you.
Great. So the final slide is the recruiting process. And I think for whether you are an undergrad or you are coming in after an MBA, typically it follows a similar process. The initial application process, I would say, starts with the career, the firm presentation at your career centre. So most firms will come to campus and present, and really I think this is crucial to go learn about the company and to meet individuals and try and get certain names there. So I think that would I would say that is the starting point for any application, to the extent you have that available. The application will take the form of a resume with a cover letter, and I know some firms, especially the larger investment banks, will ask you to fill out a questionnaire with different questions demonstrating leadership or teamwork experience. The one thing I would say is, it's very, very important not to give generic answers to these questions. I think firms want to feel like you are committed enough to put in effort to apply to them, and B, that you're passionate about applying to that specific firm rather than looking like you're applying to every asset manager you could apply to. So make sure each application is tailored. So by going to the website or going to the company presentation, you can get a feel for how that company views itself, what its culture is, whether teamwork is more important or whether diversity is more important, or whatever it is, and play to that, or at least show that you've done that research. And I think that makes a big difference. And likewise, whether it's on your cover letter or in these applications, try and draw on as wide a range of experiences as possible. People want to see that you have sort of intellectual curiosity and have exposure to different aspects. So I think showing that kind of diversity of experience in your application is really important. And if you can get a personal referral, that's great. If not, it's always helpful to try and at least in your application refer to something personal. So the name of someone you met, the name of if you really can't, you have no access to anyone who's worked at that company or who works there, perhaps say that the CEO of that company is someone who inspired you when you read his blog or his speech. I think there are certain ways just to show that you make the application a little less, a little more personal. So if you're successful in the first round interview, in the application, then you will go through to the interview. And the first round is typically a competency-based interview, where often by telephone, which is probably just a half an hour test just to see that you are who you said in the application, and to just run through some basic questions and get a feel for who you are. So it's more fit than technical, and often this will be done by human resources or a graduate recruitment representative from the firm. I think the questions you should be prepared to answer are, take me through your resume. Why do you want to work in this industry? Why did you want to work in in asset management instead of investment banking? Why did you choose this firm? And I think that you will always be given an opportunity at the end as well to actually ask questions yourself. And I think you should always have one, probably two questions ready to ask the interviewer. And this is something that I think people really underestimate the importance of. I think if you have two very good questions which show that you have researched the company, thought about the issues in the industry, or just somehow demonstrate your passion and ambition, I think that's very important, rather than asking a generic question such as, do you like your job? Or, I think it's important to say, why did this company make this strategic move? Or why do you have funds that specialize in this investment strategy, not this strategy? I think, just having certain questions can be very, very useful. So it's worth putting time into those and having them ready, and, they're likely to pay off. And then, if you do get through the first round, then you'll go to a second round. And my experience of these is that they can be relatively intense. So either it's numerous interviews, sometimes combined with a case study, and also a numerical test, and maybe sometimes a verbal reasoning test. And so it can be quite an intense day, and it's really designed to test you under pressure and to see how you react to that. On the interview side, I think that you have to understand that people are interviewing you to see if you would be a good fit for the firm, but also they're interviewing you to see if they personally could work with you and train you and develop you. So it's as much a personality fit as a talent interview. And I think the questions they will ask you similar questions to how they asked in the first round, and you're likely to get a lot of repetition in the various interviews you have. But you will also get more technical questions. So if you're a finance major, you should expect technical questions, which could be hypothetical scenarios on capital structure, or valuation methods, different accounting treatments with depreciation, etc. I think more technical questions, and you should be comfortable with these if you've been studying finance. If you don't come from a finance background, you are not going to be asked questions like this, and if you are, it will be to essentially to throw you off rather than expecting a correct answer. But another way of testing your potential in this industry is to just see how you think about valuation. So, for example, a question I got in an interview in the past was, someone said to me, imagine you're sitting in a restaurant and you can ask the restaurant owner 3 questions. He'll give you the answer to those questions, and with the answers to those 3 questions, you need to come up with a price of how much you're willing to buy his business for, to buy the restaurant for. And I think just sort of walking through the process of how of how you would think about it and what questions you would ask, I think really gives an insight into sort of how you think, and it's not necessarily the individuals from a finance background that will answer that question better. And there's no right answer. It's just really to see how you think. Likewise, there's brain teasers. I think are very common in this industry. Questions I've been asked: how many ping pong balls can you fit into a Boeing 747? I've been asked how many white cars are there in America? So I think just questions which have no right or wrong answer, but just test the way you run through logic. I think these are questions you should try and practice if possible, and just you should expect in the day. And I think you should have a view on the economy, so that just where you think the economy is going. We have a view on inflation if you can, and I think linking to that is answering the question, where would you invest today? I think is a very common question in these interviews, and this is a question you can prepare for. And if you have a stock pitch, you can just say you would invest in that stock. You may want to say you would invest in a region. You would invest in a commodity. I think, but just having that view and being able to back it up is very important, and that really just tests your interest in this industry and how much you know about the world, and how often how closely you're paying attention to market trends and economic trends. And again, have some questions ready for the interviewers. And I think the case study is a separate beast, and I think if you do have a case study that you're interviewing or you're applying to, will generally they'll generally give you information prior to your interview day, explaining what the case study is, maybe giving you an example and telling you what you need. And I think with that, you should probably prepare for the case study, and it's different for every firm in terms of what they expect. And again, use your friends, use your career services to prepare for that. And hopefully that leads to a successful outcome.
Excellent. We had a couple questions about the skill on the recruiting process. First, how important are grades in terms of actually getting the initial interview? Is that something that they look at very closely? And if so, is there anything you can do to kind of help your positioning?
I would say, grades, and I guess I can speak personally in terms of how I think about them when I'm interviewing someone. I think they're relatively binary. So I think, there's a threshold, a certain level which you probably need to be above, in your class to really to get to the interview. But I'd say that's generally done in the application process. So once you're at the first interview stage, I think it becomes irrelevant because you've passed that hurdle. I don't know. I'm not too familiar with the American grading system, so I wouldn't be able to give you, a number or a level. But I think, in the UK, The system works that the top 10% of students will get first class honours, the next 40 or 50% will get a higher second degree honours, and really any of those two buckets I think are fine and generally would not have any issue getting through the application process. I think if you do have a lower grade, I think you probably you do have a slightly higher hurdle to jump, and you can overcome that through I think having more relevant work experience or getting a personal referral will generally sort of overcome that. But there is a small hurdle to jump.
Right. Excellent. Thank you. And then let's say in the interview process, if you have completed part of your CFA, but not fully, is that considered kind of the same knowledge base as having a finance major, and then you can expect technical questions in the interview? Is that a fair assessment?
I think so, yeah. I think the CFA is relatively rigorous and does encompass a lot of the basic valuation, modelling, and accounting and portfolio management techniques that you need in this job. And so I think depending on which level you are, but especially if you're at the level 2 or level 3 stage, I think you should be prepared to answer technical questions. And I think given your if you sat the exam and you passed the exam, you should be pretty comfortable in answering them. So yeah, I would say there's an understanding that the CFA is much more related to investment management and not to sort of broader finance and economics. So I think understanding through more economic theory such as the relationship between inflation and foreign exchange rates is probably less. The expectations would be lower, but understanding the DCF or how to do a dividend discount model or look at different option strategies, I think that those expectations would be there.
Excellent. Thank you.
So that was the end of the presentation.
Perfect. Well, we still have a number of questions in the queue, so I'll get started on those. First, can you talk a little bit about maybe the difference in cultures from different asset managers, let's say hedge funds to mutual funds, or even within an asset class? Kind of, do you find a lot of variation in terms of firm culture?
I think it's a difficult question to answer unless you've been in those firms. But I think in terms of where firms think and advertise their sort of positioning, I think there is a big difference. And when you go to these company presentations or you go to the websites, they will generally tell you what's very important to them, and sort of whether it's teamwork, whether it's having a global team or a local team, or whether it's industry specialists, whether it's very much a performance-driven culture or it's a more collaborative culture. I think those are things that you can't. I think you need to get a feel for, which is why I think it's so important to speak to someone from each specific company or go to the presentation and do the research. But I think every firm does try to differentiate itself. There's a clear cultural difference between bigger asset managers and hedge funds, and that's something that's undisputed. And hedge funds generally have the reputation of being a lot more intense, slightly more cutthroat, I should say, in terms of performance is absolutely everything. And clearly there's differences within hedge funds, but that's the reputation that they have, and I think there's probably more pressure there. Whereas some of the bigger asset managers will actually treat you more treat you as an investment. So we'll work on developing you. We'll give you a buffer to make mistakes and to learn from it, and we'll devote time to you to train you, etc. So I think it's probably a slightly softer culture in asset management, at least at the early stage. But again, it's very firm specific, and I think you need to do the work yourself and and get a feel for it. And it's about finding that fit. I think it's just how you feel when you speak to people at a firm that will really help you there.
Right. Excellent. Okay, and then in terms of if you're still in school, either doing your MBA or in your undergraduate, and you're looking at internships, what are some of the areas that you would consider advantageous? If eventually you want to be in asset management, what are some good ideas for internship focus?
I think really, you have to go straight to the industry you want to work in. I mean, there's a lot of firms that will take interns for the summer that don't have that may not look to hire at full time. So I have a lot of friends 2 summers ago when I was doing my MBA who worked for smaller boutique investment funds, and or maybe family-run funds, or just smaller hedge funds, which would allow people to work for free or for a nominal wage, but with the understanding that there wasn't a job at the end. And I think gaining that experience is just as valuable as gaining that experience within a larger organization. So I think when it comes to internships, you have a much wider remit for the number of firms you can apply to that actually have positions. And I think when it comes to applying for a full job, that it's not going to make a difference if you were whether you're doing the job at a large firm or a small firm. In fact, there are times when being a small firm can give you better exposure and actually be an advantage. And likewise, like I said, I think if you do go into the securities division at an investment bank, so either as a research analyst, but also if you are going to a sales role or a trading role, I think these are all still very connected professions, and can really they give you a flavour for the markets, and that's really that can tell you both that can help you in understanding whether you want to be in this industry, but also it gives you a flavour and exposure to different asset managers. So I think I'd keep it relatively within the sort of the market front.
Right. So the closer you can get to, let's say, asset management where you want to land eventually, even if you're working for free, is better, but kind of staying within that overall class of companies and industries would be a good setup.
Yeah. Absolutely. Yeah. I mean, there is also the alternative that if you can't land an internship, is it better to perhaps just work for yourself for the summer? So work on a shadow portfolio, or if you do have a small amount of savings, set up a trading account, do the research, and try and build a track record and be able to demonstrate that you are so committed to this industry. Here's the ideas you had. Here's how much they made. Here's how you thought about investing, and that actually can be just as valuable, because I think it just really shows how passionate you are, and that you're willing to take the initiative and just demonstrate that commitment to the industry. So I think that's another thing that could be considered, but again, it probably wouldn't be the first choice.
Right. And one of the classic questions I heard you mention, and I've definitely heard before, in terms of if you were given X dollars, $1 million, whatever it is, what would you invest in? Is it okay to mention assets that the firm let's say is either betting against or just not interested in, or should you stick with what kind of the general industry that the firm is investing in?
No, I think it's absolutely fine to mention anything you like. I think if the firm is has got a strong view in a different direction, I think that's actually that's a great starting point for debate. And obviously you need to be able to back up your recommendation and be able to debate that. But I think it's very valuable. And asset management firms, they love controversy, they love debate, because it's kind of when you're really pushed, that you can kind of test how strong your argument is in the face of different assumptions. So that's something that I'd certainly say is fine. And I think in terms of, for example, going into a equity asset manager and saying that you would put all of your money into gold, is not necessarily such a bad thing. You know, I think that's fine. I think as long as you, again, you can explain that you have a negative view on equity markets, you think they're going down, you know, you think gold is a safe haven, it's linked to inflation, etc., and you know, and is where you put your money on a 12-month view. I think that's a great answer, and you have to remember, you know, most of these funds are their performance is judged relative to a benchmark. So, you know, for a typical fund, you know, if the market falls 20%, their aim is to outperform that by 1, 2, 3, or you know, ideally more. So you know, if that fund is down 15, they actually, you know, that's a successful result. And I think, you know, but if you look at it from the outside, where would you invest $1 million today? You wouldn't want to be investing in an investment which lost you 15%. So you know, it's all dependent on the remit. So I think, you know, absolutely you should, you know, do your work and just, you know, whatever you genuinely believe is the best answer, that should be your answer.
Excellent. So we have 2 more questions, just being cognizant of time. So one coming is, you know, if you have, let's say, a background, you've done your MBA, you have your CFA level 2, you know, is there anything specific you would do or recommend in kind of positioning yourself going into these interviews? Is there anything specific about kind of coming from an MBA and finance background, having worked in the technology industry, and now you have this business background, so I guess a classic career changer. How would you think about positioning and targeting different firms?
I think you need to always just be true to yourself and just realize what your strengths are and try and sell them. So, you know, I don't think trying to give the firms what they want is the right answer. I think, you know, you should be looking to really demonstrate a passion for the job and for the role, and to show that, you know, and to demonstrate that passion through examples. So, if you come from the technology industry, you've done your MBA, you know, you should say, look, I understand the technology industry. I really am curious about investing, and because of my background in technology, I've been looking at these 4 ideas, and I invested in them 6 months ago, and these are the reasons I invested, and this is where I am today. So just an example like that, so it kind of brings in your expertise from your past and shows how you can link that into sort of finance and into investing. And I think that's something that I think anyone would appreciate. So really, again, it comes back to this whole topic I talked about earlier, which is just demonstrate that commitment, demonstrate that interest in investing, and you know, the more examples and experiences you have, whether formal or informal, really can sort of build that profile that you are passionate. And you know, beyond that, I think on the technical side, I think the industry is very forgiving of people that haven't yet learned how to do financial modeling or accounting, because that can be taught. What can't be taught is just having that intuition and, you know, really understanding and being able to analyze business. And you know, I think that's a natural kind of, you know, talent which really you can demonstrate whether you come from a consulting background, an industry background, or whatever. Yeah.
Right. Excellent. Okay. So our last question here is kind of looking at, let's say, either some of the interviews you've been through or some of the candidates that you've seen. What have been some really great questions that you've asked the interviewer? Because that's always a tough one, I think, for people to come up with. So what are some of the ideas that they can think about in terms of when the interviewer says, any questions for me, you know, what would you, in an investment management perspective, start talking about?
I think, you know, there are certain questions which can show that you really understand the industry, and you know, I think having almost concerns about it. So, for example, you know, one of the questions I had when I was going into the asset management industry as a research analyst was, you have 20 or so equity research analysts on the sell side, all covering, you know, the same stocks. Why does a portfolio manager need a and analysts within the fund, why can't you just use the research from outside? And and if there are cost cuts or if assets go down, why wouldn't the research analysts be the first to cut? Given essentially they're duplicating the work of 20 others, and not necessarily duplicating, but it's a similar role. So just a question that shows that you've really thought about it and you want some kind of reassurance on how that job is valued within the firm and how you fit into the strategy of the firm. I think to me that's a question which probably demonstrates quite well that you've really thought about this job. I think one of the questions I ask now is how different regulatory impacts will sort of have on the industry. So you can see on fund management, for example, there's a much bigger public backlash to the fees that a lot of these managers charge, because there are various studies out there which say that active investment managers don't actually generate higher returns than the indexes themselves or passive funds, and why are they charging these fees? And so there's a pressure on these fees to come down and disclosures to come down, and where does that mean this industry goes in 5 years or 10 years? Does it disappear, and where does it go? And I think just showing that kind of understanding of the industry and the threats and I think that's something that's important. And the other thing which is nice, is to have a question on the firm specifically. So I can't think of a question I've asked I think for example, when I joined Arrowgrass, I went to Google. I found every article I could on the firm, and I had a question on how the distressed team and the fixed income team, the equity team interlinked. So just having an understanding of the different metrics by which they were measured on, and how how collaboration was encouraged within those. And I think that just showed that I kind of understood what all the different divisions and teams within the firm did, and how how it fit into that. So that's kind of just showing that you've done a little bit of research and you've got a little bit of commitment to the firm. Again, the best way, if you could speak to someone who works there, they will probably be able to tell you what the most pressing issue is, the most pressing concern, or the most exciting development is within that specific team or within that specific firm. And just asking that question can really surprise people and show them that you've done your homework.
Right. Excellent. So I think very much, being as specific and as relevant, staying away from those generic, what do you like most about your job type questions becomes pretty critical.
Absolutely.
Well, thank you very much. I mean, that's all the time we unfortunately have.